Um, yeah, I'm just going to do a little quick video on explaining why the cryptocurrency market has crashed. Because the general news is just appalling at understanding the whole ecosystem. And I still think a lot of people believe that everything in the crypto space is a pyramid scheme, and so eventually it will crash to zero across the board. And I'm afraid, a lot of people really want to believe that, but it's just not true. There might be 90% of the projects might be pyramid schemes, but there's a couple of core ones which are just transformational technology. But anyway, by the by, why did the crypto market crash? I guess initially we have to say that we are in a global bear market. There is a war which is seriously threatening global security, and we're in a recession from the pandemic anyway. So crypto was going down. It was in a downward spiral, just like stocks. So it didn't need much of a push to really, cause a collapse. And what was that push? And this, I think, is important because it's going to be a topic that's going to raise its head again and again. And it will be used by regulators around the world as a strong incentive to increase regulation. So the key to the crash was something called a stable coin. And there's a few of these now. The primary one, the first one, it was called USD Tether. And basically a stable coin is a crypto blockchain where its token, in the Tether case, a Tether, is pegged to the US dollar. So for every Tether there should be a US dollar in a bank account somewhere, or equivalent asset to back the price. So in a sense, you could always take your Tether, hand it back, and get a dollar. Thus, the Tether remains at the dollar value. And it's extremely important, these stable coins, for the kind of crypto ecosystem, in a sense, because it creates liquidity. It allows you to trade in and out of crypto into effectively a dollar without actually trading into dollars, which means it's much harder. So it's a key part of the kind of certainly the trading part of crypto. It's fundamental. But yeah, so Tether is actually fine at the moment, and there's a few other ones, and we're going to look at the one that's caused all the problems, which was UST. It's called. It was the third largest stable coin in existence, and it was fundamentally different from all the others. So all the others, like I said, are supposedly backed by dollar assets to support their dollar price. But UST was not being supported by physical real-world dollar assets. Instead, it was based on an algorithm. It was an algorithmically constructed stablecoin. And by that I mean basically UST was linked to another cryptocurrency called Luna. Now Luna is the token for the Luna blockchain, and it has a kind of whole ecosystem around it, including, I haven't really looked into exactly what it includes, but it may include things like decentralized exchanges, computer games, whatever. You get a lot of different projects that can use the blockchain of the Luna. But its key thing, standing out from everything else, is this relationship with its stablecoin, UST. So the idea was that basically at any point you could always trade $1 of UST for $1 of Luna. So the idea was that you could always get a dollar value back, and so it was stable. You would always be able to achieve a dollar value. It wouldn't be in a dollar, it'd be in a dollar value of Luna. And Luna would achieve this by every time someone wanted to trade a UST for a Luna, the Luna blockchain would print a Luna. It would mint a Luna, very much just like the Federal Reserve or the Bank of England mints pounds. Now everyone praised this as being genius, and they were like, great, we've kind of solved this stablecoin problem and without actually using dollars. Genius. However, as some people pointed out, it was actually madness, because what is protecting the stability of Luna? I mean, the dollar isn't stable just because it's a dollar. It's stable because it is backed by the largest military and largest economy in the world. So that's what gives it stability. That's why you want to be pegged to the dollar. It's every currency can actually have rampant inflation, and as we're seeing now, 10% and stuff. But once currencies really depeg, like say that in Germany after the First World War, so then massive inflation, and they're not stable. It's very much the imperial and the military power of America that is creates the stability of the dollar. And so it was just basically kind of shunting the problem down the line. It was UST might fluctuate, you would get more Luna, you'd always have the dollar, but that creates like a hyperinflation within Luna, which drops the price of Luna. The more Luna that's being minted, the less value the existing Luna has. And basically, to show what happened on the 11th of May, I believe it was an attack. It was a purposely sparked attack by whoever doesn't want to see this project work. But if this attack is possible, then better it happen now than 10 years from now. But they attacked the setup by basically dumping UST. Something 85 million in a minute was dumped by selling it for Luna. So 85 million Luna had to be printed. Now, this just caused, there might be other factors as well, like the general decline we're in and stuff. It just dropped the dollar peg of UST. So it went from like being roughly $1 or like 99 point whatever, which these stablecoins often fluctuate by tiny percentage points. It just dropped it to like 95 or 90 cents, which is huge. And obviously that caused panic. Everyone starts dumping their UST. They want Luna. So the Luna starts getting printed manically, and then the Luna price dumps. So then people holding Luna just dump their Luna. And basically it creates a death spiral of massive inflation in the Luna blockchain, and everyone panic selling. So I think that there was something like, I can't remember the figures now, but it went from say like 10 billion Luna in circulation to 1.5 trillion Luna within a few hours, and now I think it's like 7 trillion Luna. It's just the equivalent would be if the Federal Reserve printed something like $20 trillion in 24 hours. It'd just wipe out the value of the dollar. So that's what happened. It entered a death spiral, and at the time Luna was, and UST, well, Luna was in the top 10 cryptocurrencies, and UST was probably top 3 of the stable coins. So it was a big player, and it was, it's like the crypto industry is a little bit like a house of cards. It's all still kind of connected. You whip out one of them, especially one of these top ones, and it just causes a huge collapse elsewhere. So that's what happened. Didn't have anything to do with Bitcoin, Ethereum, XRP, ADA, US Tether, or the other stable coins. So it's not the moment that the pyramid scheme is suddenly starting to cash in. It was a failed experiment in algorithmically supported stablecoins. But it does highlight the danger of this kind of ecosystem, because some people pointed this out, everyone ignored it, huge profits were being made, people kept ignoring it. It's exactly what happened and caused the banking crisis. These kind of people seeking ridiculous profits and ignoring structural failures in the very thing that they're getting involved with. So, yeah, just to have some clarity on that and get people to see really what is happening here in this space. Yeah, it does nothing to derail the reality of the technology that underlines Bitcoin and blockchain or the other stable coins. But yeah, certainly I think the US will see this as a clear red flag, because they don't want this kind of thing being more and more integrated into the US economy if parts of it can just implode like that. Because imagine if we had gone 10 years into the future and there was $1 trillion in UST and Luna, and then that goes. That starts to drag people in from outside the crypto sphere. It starts to pull the entire economy into a black hole. So very, very dangerous. And they're going to go after the stable coins for this very reason. So like Tether, which is the big one, way bigger than the others in combined, I believe. But is still dubious whether they have $1 for every Tether they've minted. They have yet to prove it, and what they have shown is that they probably don't. So, if there is a run on US Tether, everyone's trying to cash it in and get them dollars, it would be very similar to the bank runs that we saw in 2008. And no one wants that. No one wants this kind of this vulnerability in the financial system. And really, blockchain doesn't need it. It's for traders. It's for the gamblers and stuff. Bitcoin doesn't need a stable coin to exist. Ethereum doesn't need a stable coin to exist. But there we go. Greed will triumph in a capitalist economy. Yeah.